Hey, in today's episode, I'm going to be talking about creating more income and building wealth if you're over 40. So you definitely want to stay tuned. Today's episode is brought to you by Financial Fitness. It's a 4 or 5 minute self assessment that you can take that'll give you a really good idea and some insight as to where you are with your finances and what areas you might need to improve in. So the link, alexbjones.com/ financial fitness, will be in the show notes. So go and check it out. Hey, I'm Alex, host of Black Wealthy and Wise, the number one podcast for helping families escape financial slavery and create financial freedom so you can live your best life and leave a legacy for your family. If that's something that interests you, please consider liking and subscribing to the channel. Hey guys, welcome to today's episode of Black Wealthy and Wise. I'm going to be talking about how to create more income and how to build wealth, especially if you are over the age of 40. Now, let me tell you, this is a very important topic, and I'm going to be sharing with you the reasons why. Number one. Number two, I'm going to be sharing with you some ideas or some things that you can consider to help you set your financial goals for retirement or whatever else you like to do in the future. And then I'm going to give you some things you can consider to help you accomplish or reach those goals. So you're definitely going to want to stay all the way through this episode. Why is it important that we talk about this very important subject, especially if you're over 40? I don't know if you've been really paying attention or not, but you will probably notice, if you have, you will probably notice that most of the information is geared towards millennials. Millennials. Most of the experts and gurus and other people will talk about, well, if you start investing at 25, by the time you reach 65, you're going to be a millionaire. Well, that's all well and good, but what if I'm over the age of 40 and I haven't started yet? What about me? So, I want to be able to share with you some things that you would want to consider and you want to think about in helping you to reach your financial goals. Because guess what? Contrary to what you may think or may believe, it is not over just yet for you. Okay. So if you happen to be over 40 and you haven't started already, not a problem. Not a problem. So, secondly, this is really important because the challenges and the issues and the strategies you will use as a person who's over the age of 40 will be different from someone who is younger or a millennial. Obviously, your time horizon, how long it will be before you're actually going to be retiring, makes a difference. If you are 40 or 45 now, then if you want to retire by 65 or before, then you have probably what, a maximum of about another 25 years. So the ideas, the strategies you would choose will be a little bit different than someone who is younger. And then the final reason is because when it comes to investing, there are always some risks associated with whatever you're doing. Remember, no risk, no reward. So you must be taking on some amount of risk in order for you to be able to get a return on your investment. But when you're older, you don't want to take unnecessary risks. See, you don't have as much time. The market, typically, when it comes to investing in the stock market, housing market, and many other things are similar, there's a cycle that goes along with it. Okay. And so if your window of retirement is shorter, then you don't have as much time to recover if the market happens to go sideways or if your investment happens to go sideways on you. So you want to make sure that you're not taking what unnecessary risks in order for you to be able to get higher returns. So the things that you're going to be looking for and looking at are going to be a little bit different when it comes to trying to make your money grow. All right. And then finally, of course, there's just simply not as much information out there for people like us to help us get to a place of having some financial freedom. All right. So, secondly, what are some ideas or what are some things that you want to consider when you are thinking about how you're going to go about creating financial freedom, creating more income, or building wealth for yourself? Well, obviously, number one, you have to think about your age. Your age. How old are you now? That's the first thing that you definitely want to take into account. Secondly, you want to have some idea of when you would like to retire. If it's not retirement, if that's not the goal that you're trying to reach, if you are trying to reach the goal of sending a child to college, or some other financial goal, in order for you to increase the likelihood of you being able to reach that goal, you need to have a target. Have some idea. Do you want to retire at 65? Do you want to retire at 62 or 60 or sometime before? You want to have some idea of when what type of goal you want to achieve and by when. The third thing you want to do is now that you have some idea of what your goal is, you want to start putting little pen to paper and you want to start figuring out, guess what? How much am I going to need? How much am I going to need? So let's just say, for instance, just to use good, easy numbers, simple numbers. Let's say, for instance, you want to retire. You're 45 now, you want to retire at 65, which is just for easy numbers. So that's 20 years. And let's say, for instance, you want to retire at 65 and you actually say, in all likelihood, you may live to be about 85. Okay. So you have about 20 years to kind of hit your number, whatever that number is. And then whatever that number is, you have to start thinking, how much do I need in order to live from 65 to 85? I'm trying to give you some idea as to how you should go about setting up your goal. The other thing that you want to take into account is taxes. Taxes. One of the things that many people don't talk about is depending on what type of investment or what asset your money is held in or invested in all likelihood, you're going to have to pay taxes on your gains. So if you happen to have a lot of your retirement money sitting in a 401k or an IRA, well, guess what? If it's a traditional IRA, if it's a 401k, then you still gonna have to pay taxes on your gains once you start taking the money out. So you wanna have an idea of how much is it gonna take you. Because if you have $1 million by the time you retire, Uncle Sam is gonna want his, and depending on how you've invested the money, instead of having $1 million, now you may have about 750,000 or $700,000. So you want to take that into account. Okay, so finally, if for instance it costs you, we'll say $40,000 a year to live, and you expect that you're going to have about the same amount of expenses when you retire, then and you plan to live in retirement for an additional 20 years. So roughly that's going to be roughly about $800,000. $800,000. Okay. Now, of course, you don't necessarily have to have all of the money, all $800,000 sitting in an account once you start to retire. Okay. Because whatever monies you're going to have once you start retiring, that money is still going to be generating some additional income for you. All right. So, but it will give you some idea of how much you're going to need in retirement. Okay. Or how much you're going to need to fund your child's education, or how much you're going to need for whatever your financial goal is. Let's talk a little bit about what are some of the strategies and some of the assets if you happen to be over the age of 40 and you haven't started investing just yet, or maybe you're late to the party. And again, I want to tell you that you're not, it's not over for you. Okay. It is not over for you. You can still retire well. It just means that you have to think a little bit more strategically about how and where you invest your money. Okay. So I like to look at it a couple of ways. Number one, you want to know how much money are you going to have sitting in how much money or how much wealth you build up. Wealth is the accumulation, right? The accumulation of net worth, of assets with value over time. It is the accumulation of financial resources over time. Okay. So that is what you would consider to be your wealth. So this is your wealth, value, savings, your appreciable assets. Over here, you have what I say is cash flow. Cash flow. Because both of these things are going to be important, and both of these things can really do a fantastic job of helping you reach your financial goal. So let me just say, for instance, just to go back to the example, if you needed $800,000, okay, $800,000 you felt like you needed in order for you to retire well, that would be your wealth, your value, your appreciable assets category. All right. And the reason why you felt like you needed 800,000 was because you needed to make sure um that you had that amount of money that you were going to be able to use over the next 20 years in retirement, because you had $40,000 a year that you had to cover, and you had to cover it for 20 years from 65 to 85. Okay. So that is one strategy that you could use. The other strategy you could use is you can have assets that you can buy, invest, and control in assets that pay you $40,000 a year. That way, you have enough money to take care of your living expenses from age 65 to 85. So you see how that works. Either you're going to have cash or appreciable assets that you can sell, or that you can withdraw from, or you're going to have assets that pay you, income producing assets that are going to pay you, so that way you're able to live off of the proceeds from those assets. Two different approaches, and some of the things I'm going to share with you kind of give you the benefit of both. Some do and some don't, and let me talk about that. If you know, for instance, um, it may be a little bit difficult, it may be more difficult for you to hit that 800,000 number, $800,000 number in this example. Maybe you might decide to go the cash flow route, that you're going to buy and invest in assets that can help pay you each and every month or each and every year. Okay. So if you decide to go the cash flow approach, you need to make sure that in your working years, 45 to 65, you do as much as you can to pay down your debt. And the reason why is because if you're using the cash flow method in order for you to fund your retirement years, then your cash flow, how much you pay out in cash, in your cash flow on a monthly basis, is very, very important. And so you're going to want to make sure that you pay down as much of your debts as possible so you have as little money flowing out of your household as possible. So then that way you have less expenses that you have to cover each and every month in retirement. I hope this is making sense. Okay, guys? So again, if the cash flow is the main approach, you're going to want to make sure that you are paying down your debt. If you have a mortgage, make sure your house is paid off by the time you retire, because in all likelihood, besides taxes, that's going to be a huge expense for you. Okay, so you want to make sure that you pay that. You want to make sure that you pay that down, or pay. In fact, you want to pay it off. You don't want to just pay it down. You want to pay it off. Okay. All right. So that's approach number one. Making sure that you look at all your debts to see where you're going to be you by the time you reach retirement age, so you don't have those expenses that are going to be eating up your monthly income. All right. So that's number one. The second strategy or asset that is really good for both cash flow and good for appreciation and wealth accumulation is real estate. Real estate does a very good job of both if you are buying income producing real estate. That means that's rental real estate that you use uh, in your personal portfolio, or it can be commercial real estate that you have in your portfolio. Either way, the beautiful thing about real estate is when you buy and invest in real estate, you not only are generating a cash flow from your investment, you're also able to build some accumulating value, some wealth, and some net worth, because there's going to be appreciation on the property as well. So it not only gives you cash flow, but it also appreciates in value, generally speaking, over time. So real estate is one of the first assets you definitely want to consider, because it's going to pay you both cash flow as well as help you build your net worth and your appreciation value. Okay, so that's number one. Number two, if you say, for instance, Alex, you know, I don't necessarily have either the time, money, inclination, but the real estate thing sounds like a good idea, but I may not be able uh, to have enough money, or I don't necessarily want to take the time to invest in real estate in that way. Well, the next thing you can do is you can think about investing in REITs, REIT. That stands for Real Estate Investment Trusts. Okay? Real Estate Investment Trust. What a REIT is, it acts very similar to a mutual fund that invests in real estate. When you invest your money into a REIT, you're going to receive a part of the profits, part of the proceeds, right? You'll get that um, as a dividend. That's number one. And then number two, typically the REIT will sell properties. They buy, hold, and sell properties over time. And when they sell properties over time, those proceeds actually have to go back to the investors, people like you. So you would actually get a portion of the proceeds when those real estate properties increase over time and they're sold. You will also get a portion of those sales as well. And all it costs you is an investment in the REIT, and you can do small investments. There are lots of different REITs that are traded on the stock market. Okay, and they're just like any other stock or any other exchange traded fund. You can invest your monthly money in one of those REITs on a monthly basis, and throughout the years, it's going to pay you a dividend. And as the properties are sold, then they're going to pay you a portion of the proceeds as well. So that becomes a more passive way that you can invest in real estate without having to take on the ownership, maintenance, and management of real estate properties all by yourself. Okay, so that's something to consider. Those are called real estate investment trusts. They're definitely something to take a look at, especially because they give you both cash flow and you get a chance to participate in the appreciation and sale of those properties over time as an investor. Okay. The third thing that you can consider, third strategy or third asset, is starting a home based business. Guys, if you've been listening to me for any amount of time, then you know home based business was going to show up as one of the strategies because I'm always talking about the importance of having a home based business. Why? What did I just say? This is about creating more income, right? The smart way to create more income is for you to create or start a home based business. It is better because going out to get another job just means that you're going to be at somebody else's beck and call. They're going to decide how much they decide to pay you. You cannot scale it. You cannot grow it. It's trading hours for dollars. But if you have your own business, depending on the type of business you start, now you are in control. Now you are going to position yourself so you can scale, which means you can make as much as you want to make with as little investment as possible. You have more control over how you scale your business than if you were working for someone else. And then finally, of course, the other reason having a home-based business allows you to start writing off some of your home-based expenses. It helps you to reduce your taxes. Less taxes you pay, less money, more money you have in your pockets. Okay? So you see how this works. Having a home-based business must be an integral strategy for what you want to do for creating more income, for building wealth. You must have a home-based business. Okay. All right. Now, having a home-based business typically in this case is really going to help you on the cash flow side because now you're able to take the proceeds from your business, right? And you're able to invest those in other assets like real estate that's going to throw off some cash for you or is going to appreciate and grow over time. That's how this thing works. You have the home based business, it allows you to write off taxes, you generate more income, you take the income, you put it into other assets and let those assets continue to work for you. All right. Number four, the fourth strategy or asset to consider is obviously stocks. The stock market has on average produced anywhere between 7 and 9% over since the beginning of the stock market, since day one. On average, it's going to give you roughly about 7 to 9% annual return. The great thing about stocks is it's passive. All you really need to do is, make your picks, do some research, understand what you're buying. Then once you buy into it, you want to make sure that your portfolio stays balanced, that you're not taking on too much risk, that you are rebalancing your portfolio probably every 6 months to a year to make sure that you're not taking on too much risk. Okay. So having stocks is obviously a great way for you to grow your money passively over time. Now, the thing with stocks is the question becomes, how are you going to invest in those stocks? Are you going to buy individual stocks? Are you going to buy a mutual fund? Or are you going to buy some type of electronically traded fund that trades on the stock market? If you are someone who doesn't want to put a lot of attention or a lot of time into it, or you just kind of getting started, I would say go with a mutual fund or an ETF, electronically traded fund. That's going to work out a little bit better for you. You usually have, with an index fund, you have lower fees associated with index funds. And in addition to that, generally speaking, you're probably going to get a better return if you have an index fund as opposed to a professionally managed mutual fund. Okay. How you get into those stocks, like I said, makes a big difference. If you are investing in the stock market through a tax advantaged, like an IRA or 401k, one of those type of programs, remember I said earlier, your taxes are going to be tax deferred, meaning all of your money will go into the market. It will grow tax deferred until you pull it out once you reach retirement age. If you happen to put your money into a Roth IRA, okay, um, different. That's different. If you put your money in some type of Roth IRA or Roth 401k or Roth self-directed fund, the beautiful thing about that is all it's after tax dollars. All of the monies, all of the gains that you have on your investment, you do not have to pay taxes on those investments. Okay, so you remember I said you have to pay attention to how you get into whatever asset you're thinking about, because some of those things will mean there'll be a tax bill coming due once you're ready to retire. Depending on how you get in it, you pay your taxes up front, and then that way, all of the gains is all yours for you and for your family. All right. And then number five, the final thing that you really want to think about and consider is a cash value life insurance policy. Many people misunderstand what life insurance is and does. There are several different types of life insurance, and the life insurance, cash value life insurances today can do a lot of the heavy lifting you need when it comes to managing the risk that you have as we continue to age and get older. Cash value life insurance can be a great way for you to have supplemental income in retirement that never runs out. Number two, it is also income that you can have in retirement that is tax free. If you happen to have some situation where you have long term care needs and you don't have insurance, guess what? You're at the mercy of somebody. We're not sure how those things are going to get paid. Maybe you might qualify for Medicaid. A lot of times people don't, or the government requires you to pay down all of your assets before you can qualify. If you don't want to wind up in a situation like that, there's a 70% chance that you're going to need some type of long term care, assisted living facility, or nursing home, or some type of in home care. There's a 70% chance that you're going to need it. And if you do, you want to either have long term care insurance, or you want to have a life insurance, cash value life insurance policy that can be tapped in the event you need it. And of course, all of us are going to pass on eventually, and so we know that's 100% likely to happen. And of course, you want to make sure that you are taken care of and your family is taken care of in the event once that happens. So your cash value life insurance can do a lot of things for you, not only for your family in death, but it can do a lot of things for you in terms of retirement. It can do a lot of things for you in terms of long term care needs. And if you have the right insurance, it can also literally help you build wealth in those working years. We talked about real estate earlier, and you think maybe I won't be able to afford it. Well, guess what? If you have the right type of life insurance, you can actually tap your life insurance policy to buy some of these assets to take care of your what? Living needs in retirement. If you want to learn more about some of those things, please feel free to email me or inbox me. I love to show you the benefits of having a well structured cash value life insurance policy to help you create income and build wealth. There you have it, guys. Those are what, five strategies, five assets that I just shared with you. If you happen to be someone who is over the age of 40, it's not over for you just yet. I don't want you to feel like, man, I'm going to have to, have to work until I drop. I want you to know that you can actually live well in retirement, but it's going to require you to start now. The sooner you start, the better. And the sooner you start, you need to start with a plan. So, I'm going to be sharing with you even more details about how to put together a solid financial plan that's going to help you get a handle on your finances now and for your finances later on in the future. So remember, in the show notes, you can go ahead, go to alexbjones.com/, financial fitness, take the 3 or 4 minute financial assessment so you can get some idea of where you are with your finances, or you can reach out to me. You can reach out Alex at alexbjones.com. You can email or just comment somewhere, either comment below or inbox me. I love to help. All right. Take care. God bless. We'll see you next time on the next episode.